Let's talk a little bit more about not just those student loan payments posing a potential risk to spending. Gasoline prices are also sitting at levels not seen this time of year in more than a decade. The national average now more than $3.80 per gallon, according to AAA. But my next guest is actually bullish on the full-service restaurants like Bloomin' and Cheesecake Factory. For more, I'm joined by Andy Barish, equity analyst at Jefferies, covering the restaurant space. Andy, welcome.
Hi, Kelly. Good afternoon.
I don't often see people really excited about full-service casual dining. You know, that was supposed to be a dinosaur, a relic of the past. And why is this a moment of opportunity for them, do you think?
Yeah, a couple of things. I think the sales environment is normalizing, that's for sure. It's always hard to tell what the causes are. But, you know, the middle to upper middle income consumer, I think, is in a good position and will continue to be. And that's kind of matches up with the demographic of the typical casual dining customer. And that category also saw the most, I would say, structural improvement over the past, 3 years and then coming out of the pandemic in terms of an incremental layer of sales from off-premise, much lower amounts of capacity in the category via closures, as well as some margin improvements that were found just given the challenges of the early days of the pandemic.
Interesting. So, it's kind of like as long as that consumer hangs in there, then this space in particular should be fine. And valuation, you think, also argues in their favor?
Yeah, Kelly, I think these stocks have been battered around by the recession that supposedly has been happening the last 18 months or so, and it has clearly not happened. There are some other recent pressures, traffic, as sales have normalized following a big period of revenge spending and socialization and getting out. Traffic has gone negative again, which is a little bit of a headwind for the stocks. We've also heard on the weight loss drugs here recently in the last month or so what that may or may not do for demand over the medium to longer term. But needless to say, the valuations at the low end of historical ranges, most of these stocks are trading at 5 to 7 times forward EV to EBITDA, are already reflecting kind of pretty significant slowdowns, whether or not that comes from the economy or some other factors.
Interesting. I was struck that you said the Italian restaurants are doing especially well right now. Is Olive Garden back? You mentioned Maggiano's. What is it about this theme right now?
Well, I think Olive Garden, as a part of Darden, has always done well through the variety of ups and downs in the economy. It just has such great value scores given the abundance of the food and, of course, all-you-can-eat salad and breadsticks. But the Italian category also overall, just during the pandemic, I think consumers really realized how easy it is for that food to go and how it travels so well. So a lot of the secondary players, obviously with Olive Garden being the largest by far, have seen some benefits and have sustained some of that momentum, including Carrabba's as a part of Bloomin' Brands, which is one of our favorite names in the category as well.
Interesting. So it travels for takeout a little bit better than maybe tacos or fried chicken or something like that. What part of the restaurant industry, and there's plenty of headwinds, you know all of them. What are the areas, we haven't really talked about some of the plays Kate highlighted that are more sweet green and aimed at the high-end consumer. Why are you a little bit more cautious, if I could put it that way, on some of those segments?
I think part of it is those stocks have had big runs, sometimes, for a variety of different reasons. But overall, I think what those companies are showing is unit growth also. And I think that is an area where we actually are positive because I think the market, is looking for growth still in areas, outside of technology and AI and obviously all the things that have been really hot until recently this year. So some of the growth names have performed well, like the Shake Shacks and the Sweet Greens of the world. We happen to, like some others in the category. Cava was a recent IPO we were part of. Dutch Bros, which we just did a follow-on offering for to help clean up the balance sheet, is another one. And First Watch in the breakfast brunch category is a good unit growth story in small caps. So we do continue to like some of those small cap growth names. have been neutral on the ones that that you put up earlier.
All right, for their run up in particular. Andy, thanks so much for joining us today. It's good to check in with you.
Thanks. Have a good weekend.
You too. Andy Barish from Jefferies.